Good morning, MegaWhale team, and welcome back to another video. In today's video, we are diving deep into the macro charts, the 4-year cycle, the weekly and 2-week candle close, and the short-term price action. We can see the weekly and 2-week candle close happen just minutes ago, and we were able to maintain above some very important levels. On the weekly chart, we were able to defend the leading span A of the Ichimoku cloud and the Gaussian channel lower band, and on the 2-week chart we were able to maintain above the 50 EMA, which acts as a major trigger point for directional continuations lower. These 3 levels we just talked about over the 2 different time frames act as major trigger points for the next leg down for the current bear market, meaning if we break below these levels in the upcoming 7 to 14 days, we can expect a larger and more aggressive continuation lower. The big question is, are we going to bounce from these levels and move into a consolidation like we have done historically before breaking down and then eventually reaching a bottom, or will we see a faster and more immediate downtrend develop upon the breakdown of these levels? This is the topic of today's video. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. So go ahead and check that out. Let's jump into the content. So as we just said, some very, very important levels on the macro chart were able to be defended. And we'll discuss why these levels are so important today, showing you historically what happened around about this stage of the bear market. When we broke these levels in the past, we saw larger capitulation events occur, essentially moving into what was eventually the bottom of the bear market. So even though these levels act as temporary supports, we will likely see the loss of these levels at some point. The question is, however, will we see initial bounces from these particular levels of support, moving into some sort of consolidation like we have seen historically, or are we going to see an earlier breakdown than what we have historically seen, resulting in potentially a faster or more aggressive bear market? These are questions we'll answer today. Let's start on the market data, taking a look at market volume and liquidations. Of course, we're coming out of the weekend, so volume and liquidations both coming down over here. Volume only up 15%, 225 billion. Liquidations only up 13%, 217 million. Nearly a 50-50 split, a little bit more leaning towards short liquidations, 130 to 82 for longs. Moving over to the DXY. The DXY is currently breaking through that 100 level. This is definitely something to pay attention to this week. As we know, we've got the interest rate decision coming up relatively soon, in about half a month from now. Currently, the probabilities are actually sitting closer to an interest rate pause at 62%. We know already that an interest rate pause will be bearish for the risk asset market and will likely result in a correction. So the big question is, in this next 16-day window, will we see some sort of bounce, or is the market going to price in what is likely to be a pause, react negatively, and see a continued drawdown? We'll come back and discuss that. Nevertheless, the pause in interest rates could signal a shifting tide, perhaps, indicating the Federal Reserve is unlikely to proceed forward with interest reductions at the same rate as they initially intended. Of course, as we know, through the last 12 months, that has kind of been the overall narrative, that we're going to see interest reductions. We don't know how many, we don't know when they're going to occur, but that is the overall plan. What we have seen recently with NFP data is that, of course, we saw potentially surging inflation there. That was leading for potentially surging inflation, which has definitely altered their position with the upcoming interest rate pause. So something to pay attention to. We know already interest rate pauses are inherently bearish for the risk asset market as a result of a stronger dollar and thus a weaker asset in comparison. Moving over to the S&P 500, the S&P 500 is still respecting this downtrend. Of course, as you know, we are bearish while we remain underneath this downtrending diagonal trend line. Our initial targets are going to be 6,500. We came within about a $20 range of that, so very, very close. Our second target being 6,260 to 6,230. Still some movement toward the downside before we reach that VRPV gap, which will be a major point of support. So pay attention to that. Of course, if we break the downtrend, we are expecting reversals. However, that is quite unlikely. The expected move is still going to be corrections, especially if we get the interest rate pause down into that 6,250 range. That is it, guys. Let's jump into Bitcoin. Before we cover Bitcoin, go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content, and you'll support yourself in your trading journey. Go ahead and check it out. Trade on exchanges I use and I trust, and we'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. I want to start on the 2-week chart, jump over to the weekly, jump over to the 4-year cycle, come back to the short term, finish up on the total cryptocurrency market cap. So let's dive on into it. The 2-week candle has closed, and I think this chart really just goes to show how important momentum is in price action, and how momentum, the RSI is a fantastic, probably the superior momentum indicator, is such a fantastic leading indicator. And time again, it has proven itself to be the case. If we take a look at this major uptrend we had on the RSI, and this is something we're discussing for weeks prior to that breakdown, you can see that the breakdown of this RSI occurred over here, which was this red candle. And after the breakdown occurred, we saw a continued correction of 23% for Bitcoin. That is by no means a small amount for Bitcoin. That is a massive correction there in just a 2-week window for what is a $1 trillion asset. So as you can see, guys, the momentum, the RSI, fantastic leading indicators. We saw a similar pattern develop all the way back here in 2021 to 2022 with the breakdown of the RSI right over here, signaling again further corrections developing from that point. So this year to 2 year long uptrend in the RSI, this year to 2 year long uptrend in the RSI, representing the overall momentum during the bull market, which was positive. We broke down, we saw a negative momentum shift. Upon the negative momentum shift, we have been beginning to see major breakdowns across the weekly chart, across the 2-week chart, into these next critical supports. The reason I'm showing you this, even though it's quite outdated, is because we're coming to now retest the 50 EMA. Now, the 50 EMA would suggest that mean reversion has been completed. What we saw historically from the retest of the 50 EMA after the breakdown of the bull market uptrend, this is the bull market uptrend in reference to momentum, we saw a period of consolidation develop. We saw that consolidation develop as Bitcoin retested the 50 EMA just above the Gaussian channel upper band, exactly what we are seeing again. So what does that mean to us? It means to us that provided Bitcoin will be able to maintain a 2-week candle close above the 50 EMA, we will likely see some sort of sideways consolidation or upward bounce. Now, will this bounce be big? I do not think so. I think we will see a small bounce for Bitcoin from here and then continuation lower, but that isn't really the point I'm trying to get across. I'm not really trying to hyperanalyze these short-term moves per se on the 2-week chart. What we're looking for the 2-week chart is we're looking for trigger points. And what we can see here is if we look back at this 2022 bear market, upon the 2-week candle breakdown of the 50 EMA, which was right over here, from that point, we then saw mass capitulation develop, which took us all the way through to the underside of the Gaussian channel. And then we entered that bear market bottom consolidation up until the exact bottom, which was in November. We saw a multi-week correction followed by multi-month sideways consolidation into a final liquidity grab to the bottom, and then we saw those reversals into a macro uptrend. So what would we expect? We would expect a similar reaction in price action. The 2-week breakdown of the 50 EMA would likely result in the next leg down for the cryptocurrency bear market to begin, which would take us underneath the underneath the lower band of the Gaussian channel, and then into some sort of sideways consolidation where we see liquidity grabs potentially to create bottoms around that October date 2026, and then eventually continuing into a macro uptrend and the next bull run. That is the anticipation, and that is going to be the trigger. Watching that 2-week, and that is exactly why this 2-week candle close, which I've been talking about now for a bit, was so important that we were able to maintain above the 50 EMA, and we have managed to do that. So it delays this potential extended breakdown another 14 days. So if you were watching for the next leg down, the next leg, which will likely take us all the way into a bottom for Bitcoin, which we anticipate to be around $52,000, okay, to $36,000, that will trigger, that will begin upon the breakdown, the 2-week of the 50 EMA for Bitcoin. So pay very, very close attention to that. Again, this is a pattern we saw in prior bull markets and bear markets. If we go back to our 4-year cycle chart, you can see this is the 2-week chart. We're on the 2-week chart again. Look at the arrow up over here, 2-week. You can see that happened over here. The breakdown, the 50 EMA. You can see we potentially are happening again. We've actually defended that this time around. You can see it happened over here, and you can see it happened over here. Now, what did you notice in this scenario? This scenario and this scenario. Every single scenario. Upon the breakdown of the 50 EMA on the 2-week, we saw the price action plummet through the Gaussian channel, through the midline, and pretty close to that lower band, creating a bottom for Bitcoin. So that is something we are watching to play out again. That is why we're talking about it so much. Let's move over to the weekly chart now for Bitcoin. Now, as we know, yet again, and I'm just going to keep yapping on about it because as a momentum trader, I just love to see the RSI act as such a good leading indicator all the time and time again. You can see again, guys, over here, the RSI broke down right over here. What have we seen since? We saw a continuation through the midline into the lower band, about a 15% pullback for Bitcoin upon the breakdown of that horizontal level on the RSI. As you know, if we get rid of the indicators for one quick second, that uptrend on the RSI was a reflection of, again, a bull market support level. We held support here, we held support here, we held support here. If we bring that 50 EMA back now, you can see the 50 EMA was retested every single time. We lost the 50 EMA, we lost the RSI. We are in a downtrend, expecting corrections lower into the 200 moving average on the macro. But for that to happen, of course, we need to break that 2-week chart lower, meaning we run the risk of seeing some sort of sideways consolidations develop over here before we then break back down and then continue lower. Something to pay attention to. Of course, those arrows were not reflective of where I believe Bitcoin is going to go. I do think Bitcoin will bottom around 36 to 52,000, and we'll talk about that in 1 second. So, in terms of the weekly candle close, what are the levels we're watching? Number one, the Gaussian channel lower band. Now, just as we said, the 50 EMA on the 2-week chart acted as not only a temporary support historically, but a trigger for an extended correction through the 2-week Gaussian channel. Same is said about the weekly lower band. If we take a look at the weekly lower band, we saw a retest around over here. In fact, we saw numerous retests around that lower level, all of which resulted in bounces. But when we finally broke below that level, that is when we saw that extended correction downwards. So you can see again, the lower band of the Gaussian channel acting as a capitulation trigger, the breakdown resulting in extended correction. So again, if you want to watch that next leg down, wait for the breakdown of the lower band of the Gaussian channel. That would likely trigger that next leg down for the market. Looking at the next one, we had the Ichimoku Cloud leading span A. Now taking a look, leading span B. Taking a look at this, let's just go ahead and bring this one up a little bit more clearly. I'm just going to go ahead and get rid of some of these other levels. Let's just make this one a little bit more clear, and we'll change it to red. You can see here, guys, when we broke below that level back in the 2022 bear market, we saw capitulation downwards into consolidation, which eventually meant the bottom, and then we saw reversals. When we broke that level over here in 2023, we started the bear market. Started the bull market. Sorry, wrong way around. We've started the bull market, and we maintained above this level ever since. So the loss of this level is going to be profound for the overall macro strength of Bitcoin, likely resulting in extended correction. So everything I've said so far has just been, if we break this level, we're going to see extended corrections, and that is very important. But so these are trigger points. But I think when you look at that information and then you flip it, what it is also saying is that while we maintain above these levels, we've moved a massive way down into a period of support where we actually may start to see some diminishing selling pressure for the first time in this larger correction now, which could result in some short-term bounces. Now, these bounces will not be bullish. They will be still bearish, because even in a downtrend, you see bounces, right? Just like in an uptrend, you see pullbacks, right? It's the same thing. It doesn't mean it's going to be bullish. It's going to be a natural part of the price action. Now, if we take a look at the 4-year cycle, ideally we would like to see some sort of consolidation, whether it be a sideways consolidation, whether it be a upward consolidation, whether it be a slight downward consolidation within this bear market. But so we take a look at the expected bottom date for the bear market. This is going to be October 5th, 2026, right? We have still got about 10 months until that date. Meaning, if we take a look at how much Bitcoin's pulled back already since October 6th, 2025 to October 5th, 2026, we have pulled back a significant amount, around 35% of what is likely to be only about a 65 to 70% pullback. We'll pull back about 50% of the way already to that 36K target, which is a lower target in terms of percentage drops. Which means Bitcoin has accelerated the beginning of this bear market relatively quickly in comparison to prior cycles, meaning it is likely we'll see some sort of consolidation through this cycle, and if we don't, we could see an earlier bottom or an extended sideways consolidation as we approach the bottom, meaning we could see a faster move down and then a longer period of consolidation finally, and then a liquidity grab, and then we see that continuation upwards rather than some sideways consolidation here, maybe a lower high, then a correction, then that liquidity grab, and then a continuation upwards. There's a few alternative ways this can play out, but it all comes back to the trigger points. We need to watch these levels, as these levels will tell us exactly what those next moves will be. Let's go ahead and jump over to the short-term price action now. I will say one more time, it's a good thing that these levels have maintained support, at least for now. They act as temporary supports and give us very clear trigger points for the next leg down. Let's take a look at the short-term. So the short-term price action is very clear still, guys. While we remain below, we'll keep it very simple, 108,000, we are still in a bear market. Simple as that. Break 108K, we essentially show macro strength, we invalidate a lot of the bearish signals, and we could see continuations upward again. Doesn't matter what happens, if we see a rally back up over here, we're still going to see continuations lower. Probabilities are still in favor of that. In terms of the short-term price action, we've got numerous levels of resistance sitting just above us. You can see what was once support becomes future resistance. So this is a major support. It is now a major point of resistance. So 92,000 to 90,500, major point of resistance. If we see rallies in here, we could expect rejection again for Bitcoin. At the moment, while we remain under 92.5 to 90.5, the anticipation, the expected move is that we eventually move into 74,000 to 76,000. Now remember, if we close below around about 85,000 on the 2-week chart, and the weekly chart, we break these key levels. These levels are sitting at around 85,000 for the 2-week 50 EMA, and then 80,000 for the lower band of the Gaussian channel and lower leading span B of the Ichimoku Cloud on the weekly. So we don't have a lot of room to move down. It has to be either a liquidity grab into that level and then a fast move back up, closing back above again, or we need to actually see that breakdown, and then we will see likely continuations lower. It is only going to be one of those two scenarios. Again, I can't predict if they're going to have a crystal ball. We don't know what is exactly going to happen in terms of which scenario will play out. We have to play it level by level and watch how the price action responds to these trigger points, because those trigger points will then tell us the probabilities have shifted in favor of one of those particular directional scenarios, and then we can play that scenario. So in terms of the short-term price action, we are beginning to see some inclinations of absorption develop, more or less exhaustion of selling. What we are seeing here is, of course, a green dot print. This is signifying to us already that there is diminishing selling pressure happening. Now, that is partly as a result of sort of mass liquidation into that 80K level. Mass liquidations often trigger reversal, so we've seen a short-term reversal. So it is possible that this will not exactly maintain initially. We might see some pullback first, then continuations. But what we are really watching still is that downtrend in the RSI. We're using momentum as a guiding light to go ahead and trade this market currently. So watching the RSI, if that does break upwards, we could see some sort of reversal into 92,000, and then we will see that continuation back down again. What happens on the immediate short term is we could see some pullbacks back into this level on the VRPV around 84,000, maybe a tad lower, and then come back into those levels upon the RSI breakout, and then we could see corrections back into 74, 76 in about 2 weeks from now, which will of course trigger the respective breakdowns on the 2-week and weekly chart, initiating that next leg downward. Either way, guys, I think the most important message I'm trying to get across right now is the bear market is very much here. The invalidations of the bear market is still very high above us. So we've got movement room over here. If we lose these levels of support, we will see extended corrections. And these levels are now acting as temporary bounce points. So we're going to see some sort of bounce. We've seen historical bounces develop from these respective levels in prior bear markets, so we have to anticipate that that is potentially a possibility this time around as well. I'll wrap up the video there, guys. Have a fantastic rest of your day. We'll catch you in tomorrow's video, discuss the short term a little more, go over total cryptocurrency market cap, because we're out of time, and we'll catch you guys then. Cheers.